Good day, students. As part of Section 9 of the Office Administration syllabus, which is Accounts and Financial Services, this video presentation will be covering financial institutions. You are reminded to pause, stop, or review the video for clarification and for note-taking. By the end of this video presentation, you will be able to define the term financial institution, identify types of financial institutions, describe each financial institution identified, state the characteristics of these financial institutions, and compare financial institutions based on the services provided. We start by defining a financial institution. When we think of the term financial institution, we think about money and building. So a financial institution is a company engaged in the business of dealing with financial and monetary transactions, such as deposits, loans, investments, and currency exchange. Financial institutions encompass a broad range of business operations within the financial services sector. These may include banks, trust companies, insurance companies, brokerage firms, and investment dealers. Financial institutions can operate at several scales, ranging from local credit unions to international investment banks. Virtually everyone living in a developed economy has an ongoing or at least a periodic need for the services of financial institutions. And I'm sure that this would be true for you and members of your family. Some examples of financial institutions include credit unions, commercial banks, central banks, insurance companies, offshore institutions, investment companies, and cambios or bureaus d'échange. Credit unions. Credit unions are types of financial cooperatives that provide traditional banking services. Credit unions range in size from small, volunteer-only operations to large entities with thousands of participants spanning the country. Credit unions are created, owned, and operated by their participants or members. They are not-for-profit enterprises that enjoy tax-exempt status. Usually, credit unions offer a lower rate of interest on loans than commercial banks. Credit unions follow a basic business model where members pool their money and technically they purchase shares in the cooperative in order to be able to provide loans, demand deposit accounts, and other financial products and services to each other. Any income generated by the credit union is used to fund projects and services that will benefit the community and the interests of its members. Commercial banks are types of financial institutions that accept deposits, offer checking account services, make business, personal, and mortgage loans, and offer basic financial products like certificates of deposits and savings accounts to individuals and small businesses. A commercial bank is where most people do their banking as opposed to an investment bank. Banks and similar business entities offer the most commonly recognized and frequently used financial services, which are checking and savings accounts, home mortgages, and other types of loan for retail and commercial customers. Banks also act as payment agents via credit cards, wire transfers, and currency exchange. In contrast to the commercial bank, a central bank is an independent national authority. Central banks conduct monetary policy, regulate other banks, such as the commercial banks, provide financial services, including economic research, and its main goals are to stabilize the nation's currency, keep unemployment low, and to prevent inflation. So there are some terms there that I would like you to research: nation's currency, unemployment, and inflation. So you are asked to do some research and find definitions for those terms. Insurance companies represent one of the oldest types of financial services or financial service institutions. They provide insurance for individuals or corporations, and basically, insurance companies offer protection of assets and protection against financial risk. These assets are secured through insurance products. This is an essential service that facilitates individual and corporate investments and also assists in fueling economic growth. In order to define offshore institutions and describe its characteristics, we must first look at the meaning of the term offshore. The term offshore refers to a location outside of one's national boundaries, whether that location is land or water-based. The term is used to describe foreign banks, corporations, investments, and deposits. Some companies may legitimately move offshore for the purpose of tax avoidance or to enjoy relaxed regulations. Offshore financial institutions can also be used for illicit purposes, such as money laundering and tax evasion. However, it should be noted that the illegality is not in having an offshore account, but in hiding it. So an offshore account is one that is based in a country other than the customer's or investor's home nation. Offshore financial centers are offered by many countries, territories, and jurisdictions. These include well-known centers such as Switzerland, Bermuda, or the Cayman Islands, and lesser-known centers such as Mauritius, Dublin, and Belize. Correction there, Dublin, not Dublin. Generally, an investment company is a company, corporation, business trust, partnership, or limited liability company that issues securities and is primarily engaged in the business of investing in securities. An investment company invests the money it receives from investors on a collective basis, and each investor shares in the profits and losses in proportion to the investor's interest in the investment company. The performance of the investment company will be based on, but not identical to, the performance of the securities and other assets that the investment company owns. Bureaus or bureaus d'échange are for the conversion of currency, and this is why they are often located at places such as banks, travel agencies, airports, railway stations, and large stores. So now let's see how well you remember what you have learned during this lesson presentation. I ask you to look at these 8 questions and state whether the questions are true or false. You are asked to review the video to see if your answers are correct.